I am really proud of what Lyft accomplished in 2023. Gross bookings reached an all-time high. Ride growth accelerated every quarter, ending the year up 26% in Q4 versus last year. We also had the highest annual ridership in our company's history, and ride frequency growth was the strongest it's been since 2018 prior to our IPO. We have three focus areas for 2024, and here they are: continuous innovation, rideshare perfection, and partnership-driven growth. Women Plus Connect is one great example. Since the launch back in September, roughly 2/3 of eligible drivers, and millions of active riders are using the feature, and their feedback has been outstanding. Finally, partnership-driven growth. Last year, approximately 20% of our rides had a direct connection to one of our partners. For instance, our Delta Airlines partnership began with Riders Rewards, where you can get points. But we now also support their flight crews with our Lyft Pass commute solution. Now, before I turn the call over to Aaron, we have two important pieces of news to share. The first is we're hosting our first Investor Day in early June. And second, as lead into that event, we are providing directional commentary for our full-year performance this year. The headline is that in 2024, we expect Lyft to generate positive free cash flow on a full-year basis for the first time in our company's history.
Driver hours grew 47% year over year in Q4. This reflects strong engagement by existing drivers and meaningful growth in new drivers. Total rides grew 26% year over year, accelerating for the fourth quarter in a row. Ride frequency, referring to the average number of rides per active rider, grew double digits year over year. We expect gross bookings of $3.5 to $3.6 billion, up 15 to 18% year over year. For the full year 2024, we expect total rides growth year over year to be in the mid-teens. In 2024, we also expect to generate positive free cash flow for the full year for the first time. We expect that roughly half of adjusted EBITDA dollars will convert to free cash flow. I would note that our quarterly free cash flow trends will vary, so I'd encourage you to focus on the full year.
You know, the fact that we can guarantee to sort of the 98% plus reliability level a scheduled ride, I think speaks really well both to our operational excellence, but also to the potential of the product. So right now, only about 5% of our rides are scheduled. We actually see there are a lot more use cases building on this infrastructure we've built. I think there's a lot of upside, again, for riders, but also for drivers, because drivers do get paid more. You know, back to work is definitely a thing. Travel is definitely a thing. All the macro trends that you see, and we look pretty closely and try to detect any reasons to worry. I really can't find much to worry about there.
So I touched in some of my remarks on some of the trends we're seeing, both on the driver side, right? Drivers choosing to drive more with Lyft. That really contributes to the efficiency, the way that we efficiently run our marketplace. And our directional comments for 2024 really are grounded in continued operating expense discipline. So even as we are able to grow the top line, engage more efficiently with the market, et cetera, we retain that operating expense discipline. You know, very pleased to give this directional commentary on free cash flow for 2024. You know, from where we sit today, we believe we've reached a turning point. In terms of what's driving that, first and foremost, obviously just operating a healthier business, right? We've got adjusted EBITDA growth and expansion. You know, the last thing that I would say is I obviously touched on our capital expenditures moderating year over year. This is largely because, you know, we invested in 2023 in updating our bike fleet across our bike and scooters business. While most of that investment and deployment happened in 2023, there's still some more to come in 2024. But bottom line is, again, we feel we've reached a turning point and we're very focused on improving from here.
So behind the scenes, you might have seen the report that came out a couple of weeks ago from Gridwise that sort of suggested that Uber drivers' earnings have been decreasing. I think they estimated about 17%. Whereas ours have been going up over the same period. I forgot what the period was, I think 2 years, maybe a little over 2%. We published a white paper about 10 days ago, or actually I guess about a week ago. A team, quite a large team actually across the company, spent a lot of energy looking not just at gross earnings, which is how much drivers get paid, kind of off the top, but also net earnings, in other words, what they make after their expenses. And on average, after all the expenses, $23.46 per engaged hour is what Lyft drivers make. And we're very proud of that. We think it stacks up really nicely against other potential ways people can earn money, particularly when you add the flexibility you get. Thank you all. We look forward to keeping up to date, and thanks again.